You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionPit.com. If you trade options, you want to be smart about every decision. So why not choose the smartest platform for your trades? At public.com, you can view upcoming earnings dates directly in the options chain. You can queue and execute multiple orders simultaneously. Easily view contract performance over time. And if you have a question about any stock, you can ask Alpha, their AI for investors. But want to know the smartest part of trading options on Public? Earning rebates on every single contract traded. No other platform provides options trading rebates, and they reduce your trading costs to less than $0 per trade. So, make the smart move and switch to public.com, the only options trading platform where you can earn rebates on every single contract traded. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. And now, get ready to hit the Option Block.
All right, everybody, welcome back to the Option Block, the bi-weekly options extravaganza. I hope all of you out there had an interesting, a good, a safe weekend out there. A lot of fun stuff to kick off the trading week this week to sink into. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which all of you folks are mainlining these days. Remember, like what you hear of this show, anything else on the network, throw a like, a star, a comment, all that fun does help at the end of the day. You'd be surprised how many new people are continuing to discover the content day in, day out over here. So all of that in aggregate, even though we have been doing this for 17 odd years now, every new review, every new rating, all that gets added into the algorithm, and it all helps at the end of the day. And if you want to go above and beyond, of course, you know where to go. theoptionsinsider.com/pro. That's where we have our pro Q&As, our live streams, options oddities at the end of every week, and a whole bunch of fun. And speaking of fun, if I sound a little bit different this week, it's because I'm coming to you not from our studios, which are ironically right up the street. You never know it because everything between here and there is completely ripped apart. You can't get there from here. But yes, we are up the street, but now we're coming to you from the SIBO here for the Option Pit Super Summit. Is that what we're calling this year? What is
Conference 2020.
Conference 20. I like Super Summit, but you can go with whatever brand. It's your event, whatever branding.
You do a summit,
yes,
you can call it the Super
I will call it the
Summit.
Super Summit. You're right. But in the meantime, we will go with that. And that tinny voice means we are joined by the greasiest of meatballs, Mr. Mark Sebastian. Welcome to your own event, sir.
Hey, thank you for hosting me briefly for a podcast.
At the Super Summit, yes, at the Super Summit. All the kids are calling, I hear that. And then next to him, we have in person, good to see him in person, out of Maine. I didn't know it was possible, away from the Giovinazzi compound. The Rock Lobster himself, Mr. Andrew Giovinazzi, also from the Option Pit Super Summit. Hello, sir.
It's nice to be invited to my own summit. And it's the only time I leave Maine in the summertime. That's it. This is it. This is my big event. I almost got killed twice and had my bag stolen just on the way from the hotel to here.
Welcome to Chicago, sir. There you go. That's a fitting entrance.
I'm waking up.
And speaking of perhaps not fitting entrances, we are usually joined here by the unclest of Mike's on the show every week, but he's fashionably late, the prima donna that he is these days. He'll be rolling in probably halfway through the show. So we are joined, an able stand-in if ever there was one, the once future and now present Dr. Vix and now V-Stocks, Mr. Russell Rhoads. Mr. Rhoads, welcome to the Option Block. Hard to believe it's been a decade plus on the show and you've never been on before.
I think this is the fourth or fifth different program maybe that I've been on. And I pride myself, I think I'm the only person that's ever been your Joan Rivers.
I think you have, yeah.
He actually allowed me to host one of his programs when he was on the program.
I've had these guys host the Option Block a couple of times when I was traveling. But yes, as like my go-to multi-program Joan Rivers, the chain smoking, you filled in very ably. It was impressive. Before we get into the trading block, this was where I was going to present Uncle Mike with his grand prize that he's been on me on for 6 months. If you don't know, listeners, we kick off our broadcast week every week on this show. It's morphed into 80s trivia, but last year it was 80s wrestling trivia, which Uncle Mike exceeded at. And so he won our grand 80s wrestling trivia prize, which was a fun replica intercontinental title belt, desk-sized one, official, and he's been on me to give it to him for 6 months. And he is not here to hand it to him now. So you know what? To spite him, because you call me the benevolent dictator, you can call me Santa Claus today, because I come with other gifts.
This is as close as I'll ever get to a prize.
This will anger Tosaw to no end, which is why I want to do it. But I thought, you know what? He can't be the only one who wins a prize today, even though he did earn it. So, Mr. Meatball, in honor of you putting on the Super Summit, and because in honor of coming in second, runner-up in our 80s trivia, you don't get the title belt replica, but because you are a Texan now, I figure they like things big and they rock some sweet belt buckles down there. You get the IC title belt replica belt buckle, especially for Texas. So there you go.
Yay!
Actually, you need a hefty belt to hold it up, but it's serious business.
If you're not seeing this, you are. This is just a thing of beauty, Mark.
You could knock out someone with that in a moment of duress if you needed to. That's a serious business thing there. So there you go. There you go. You're runner-up.
Thank you.
Now you are a true Texan. You have a belt buckle the size of your head. And Mr. Rock Lobster, because you have given me a hard time about it endlessly, I had the temerity to give you a shirt last year, and it was one size wrong. And I have not heard the end of it since. So again, because I am Santa Claus today, I shall make up for my errors. Nice. Your shirt size, actually, sir. Now
that looks great.
Now you are official.
Nice.
Your shirt size.
Nice.
Oh, that looks great.
It's
it's a perfect color
and
for Thursday.
it's the right size. It's beautiful.
The right size. Only the best for you, sir. Mr. Vix, I didn't know you were going to be joining us. I would have come with goodies for you as well.
I think that shirt's too small for Andrew. I think it's going home with me.
Next time you come by the studio, we'll load you up, Mr. Doctor. There you go. See? Even the Grinch's heart can grow 2 sizes. All right, then. With all the prizes dispensed, let's get on into a little bit of the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, welcome to the trading block. The portion of the show where we do just that. We break down what the heck is trading out there. We're sliding up our screens. Obviously, a little bit of a different situation here. We're here live from the Option Pit Super Summit, TM. So a little bit different in terms of data and connectivity. But obviously, some crazy events popping off this week. So let's start there. I actually want to start in reverse order. I want to go to the once future and present Dr. Vix, because he has been whispering in my ear now for months about his secret UVIX trade. And he's like, Mark, you have to do this trade. It is the best trade. I think you said the best trade in recorded time immemorial. I think you how you termed it.
You were totally I was told it was the only strategy that never loses.
Ever possibly loses.
56% of the time.
There he is.
There's
Fashionably late. Fashionably late as always. The uncleist of Mike, sir. How you doing? Welcome to the show, sir. Grab a seat right there.
Took his chair.
Oh, they took his chair. All right, grab that one right there. Grab that one right there.
We're like Clint Eastwood. We took his chair.
Yeah, you don't make it. And you know what, Mr. Uncle Mike, I toyed with. We're already in the trading block. We already did our dispensing of prizes from the 80s trivia game segment. You did miss it, so you could rightfully be held in arrears to not claim your title. But you know what? I'm not that guy. So I've held on to it for 6 months now. I've heard it endlessly from you about your desire to have it. I got to find where I put it. Here we go. Replica IC official belt. Here, let's bust it out so you can see it. Now you can impress all of your clients as the true 80s wrestling trivia champ that you are. Actually, it's pretty cool. I'm going to miss having it on my desk. There you go. There you go. Hey, here, do that again. I'm going to get a picture of you. We're going to put it up. This is official.
I did the Ric Flair music, folks. I don't know if you knew that. Oh, yeah.
There we go.
Well,
all right. Now it's official. Now all those clients who said they were gonna walk out on you because you didn't have the actual belt, they thought you were lying. Now here you go. You have the belt to prove it, sir. So congratulations to you. All right, let's get back to some of the fun we had going on here, because obviously a lot of fun popping off over the weekend. We did debate it on Ball Views what we thought the end result would be of the different scenarios. We thought, well, if Biden steps down and throws it to an open convention, then maybe we won't see a ball pop because more uncertainty in the market. If Biden steps down and he hands it off to Harris, which ended up happening, we might see vol come in. I think all of us were still hoping for a little bit of froth on the open, but not to happen. And that is, of course, what happened. Vol coming in fairly aggressively. As we kicked off the show, we had most of the S&P and everything else up 0.5%, if not more. VIX was at about a 1540 right as I was walking in here, probably a little bit lower now. It puts it down about 1/3 of a point from where it was on the Thursday show. And VVIX, the vol itself, after getting pretty frothy up to about a 94 on the show on Thursday, down a point right now, down to about 93 out there. So let's start there, Mr. Rhoads, as the progenitor of this trade. Actually, before we can get there, we had a poll we did this weekend as well for a lot of our listeners. We said VIX closed at 16.5 roughly, so we're watching weekend risk play out in front of our eyes quite literally right now. Where do you think VIX will open on Monday morning? We gave them 4 choices around here, so the 16 to 17 range, a little bit higher, 17 to 18, even higher, so north of 18, or lower, below 16. We all know what the end winner was in terms of real life, it was below 16. And that's where our audience went to, 29%, so they're a savvy bunch saying lower 16. 28% though, we're going higher, 17 to 18. 25% said we're going to vacillate between 16 and 17. And 18% said we're going popping hard, going north of 18. So Mr. Rhoads, do me a favor. We talked about it on Vol Views, not to the option block audience. So really quickly run down what your strategy is, how you came around to it, and your thoughts on how it played out this weekend, sir.
What I figured out was if you buy UVIX on the close on Fridays and then sell it on Monday morning first thing, if you did that consistently ever since UVIX got listed back in 2022, you actually would have a profit. And so I found a miraculous system to actually make money owning UVIX. Now you lose more often than you win. You lose. The win percentage was about 44%. The average profit is about 1/3%, so it's not a really big deal. But of course, we've been talking about it on Ball Views for 3 or 4 weeks, and what led me to it was I bought UVIX because I can't remember what weekend we were. I think I bought it because of one of the European elections. And the volatility was lower on Monday, but I actually made money owning UVIX. So then I did a little testing. And that's when I looked at, again, buying on the close Friday, selling on the open Monday. It's failed 56% of the time, but I think mentally, when you think about buying any of those long volatility ETPs, you have to have the same attitude that you have when you buy an option, which is typically if you buy an option, your win percentage is going to be under 50%. We all know that selling options works a lot better than buying options. But after I put that trade on, I was like, I wonder if you just did that every weekend, what would happen? And that's where the outcome came that it's actually a small profit. But I also consistently own SVIX. So it's kind of nice to have something that might offset a bad weekend for an SVIX position as well.
Well, I mean, what you're describing is kind of a weekend risk hedging strategy that does have a positive return. And you know how difficult it is to get a positive return out of a hedging strategy, right? It is very difficult. Most hedges reduce volatility on a portfolio, but they don't, you're generally paying that volatility by giving up P&L. So what you're telling me is that you can do this on a regular basis and turn a profit and then not have to worry about the weekends.
Exactly. And of course, like any newly found thing, we talked about it extensively on Friday. I bought it.
Yes, you finally whispered evil into my ear.
Bought it.
Andrew got into it as well, yes.
I think maybe I'm up here with wrestling belts and everything to kick my ass. But I think it was the worst weekend in like 6 months.
In the history of the strategy,
and everybody
yes.
did it. So I'll keep working. I haven't run all the statistics on it. I just have some high-level numbers. When I'm back up here on Wednesday, I'll talk about it.
I like the idea. I feel like it's riding kind of the weekend effect a little bit because they sort of compress the vol anyway. So normally what happens, like liquidity providers know that the weekend is coming, so they lower option premium. And they usually start doing it earlier in the week. For anybody that was a market maker, we used to run our sheets ahead. So basically, if you think about it, like implied volatility is always run on today's trade date. So if I'm a trader and I'm pushing the date forward, that effectively lowers the option price, but it's going to look like a low implied vol. So it could be like a little weekend effect thing because the futures kind of hang.
I think that helps with the execution.
That was why I did it. I thought the weekend effect was the saving grace of it, right?
I know, I was looking at Longo at the close and I'm like, I can't believe I'm buying UVIX on the But Dr. Vix is usually, he's been coming here like 2 years with great ideas, so I'm going to do it anyway. So I bought 100 shares.
I never imagined.
I have confidence now. I have confidence.
Like every weekend, we see nothing happens. The VIX gets that weekend back for at least a few blessed minutes on the open, right? And you get a chance to get out. And that seemed to be the same, except for the 1 week when something actually happens on the weekend, right? And then they crush.
Well, and this is the second part. So I'm like, never been long 100 shares of UVIX in my life. And then the president gives up the race, or the current president gives up the race. I'm like, oh man, I'm gonna get at least some kind of markup on Monday. And then like market rips on Sunday. I'm like, oh well, that was it felt good for about 24 hours though. I had the warmy fuzzies.
So there you go, listeners. That was our little free swing at the weekend risk ball, which turned out not to be so free. But fun stuff nonetheless. Let's go around the horn the way we normally do. We'll go in order here. Mr. Meatball, because it is your Super Summit, we'll start with you, sir. Obviously a lot going on this weekend, a lot kicking off with our rally here today, vol coming in. What's catching your eye and what are your thoughts on all these events we saw playing out?
Yeah, it's a nice little rip. They're unwinding the Trump trade today, basically, right? You look, the Dow Jones is weak, the Russell's relatively weak, and the Qs are going wild, right? That is the Trump, the Trump trade, quote unquote, was, long industrials, long, old line businesses, long oil, and out of the Qs. Now the Qs have gotten so overbought that I actually think it's less about politics and more about just the market needed to rotate a little bit. But it kind of got over-rotated in the Russell 2000 because that rip last week was bananas. And so, I'm not sure I fully buy today yet. I'd like to see. I need a little follow-up before I'm willing to believe this. I'll believe we're back tomorrow, but today I'm just kind of a little bit hands-off.
What you're saying is by the close today, sell off and UVIX printing 8. That's what you're saying.
I think Andrew and Russell are both going to cash in.
Sadly, I cashed my UVIX chip in early. As soon as when I saw you don't want to hold that UVIX thing for too long.
It's like liquid napalm. It can explode, but it'll burn you through your hands on the way down, yes.
Yeah, so I thought the weekend, a lot of the uncertainty around the election, although there's still more questions, I think, because I don't think anybody's seen Biden yet live, after this. So there still could be some whatever. But from a vol point of view, the fact that there was speculation, so when there's speculation, vol goes up, generally. Any kind of speculation. Any kind of uncertainty, vol goes up. Like, we've had, 4 or 5X market makers in here. Anytime you're uncertain, what did you do? You charge more money. Yeah. And now that, I don't think he's going to undo his resignation. I think the ball is rolling in one direction. That should probably take some of the heat out of VIX. The second part is now we have big tech earnings. Tesla, Google, a bunch of big ones, Apple. And I don't think the market reacted well to the mini big tech earnings last week.
No.
Like, they were good. They were even great maybe, but they weren't perfect, right? So you could see, I think, a little bit of, a little bit more churn and a little bit more of the market orbiting, like, gap up, sell off a little bit, gap up, sell off. So, and that might keep, VIX here. And then the third thing is, for VIX expiration, is right in the middle of the Democratic National Convention.
Oh,
so
geez.
that's going to play, it's going to mess, like when you're trading VIX, the timing's important because it expires. The fact that they're going to have it literally August expiration right in the middle of the convention.
Right down the street, you can come back for it, Andy.
I can't wait. I can't wait.
Yes, yes.
So anyway, those are, now also, but the big tech earnings thing will have played by then. So my guess would be big tech earning plays. I don't know what's going to happen, but probably a little bit more pullback from the Q, and then vol kind of subsides somewhat. And then maybe before unless there isn't more news about, Harris and whatever, who she's picking for VP and all that other kind of stuff. And then you should see VIX start to wind down a little bit, barring any tragic and that's kind of where I see it going.
Mr. Rhoads, outside of your weekend UVIX, which I just checked, UVIX printing right around 5.5 right now. So good thing we all hit the bid on the open there.
Yeah.
But don't just lick.
No, that's the rule. Get out of it on the open. I
Exactly.
didn't want to mess around with that at all. Didn't want to sit around and go, oh, volatility will come back today. When it turns into the hope and pray trade, I just get out.
Don't smoke the hopium bowl.
Okay.
Don't
The
smoke
hopium?
The hopium. Don't smoke it.
I'm mainlining some hopium. So you guys brought up the tech earnings. We got Google and Tesla. Both of them had outlier moves to the upside last quarter. So what I'm hoping, and I just have a hard time seeing them repeat to the upside like that. Like Mark said, like what has already been said, tech earnings were okay. The reactions weren't all that great last week, which may be a precursor to what we'll see out of Google and Tesla. Because they had bigger than average moves to the upside last quarter, what I'm hoping to find, and this is the hard part about trading earnings, you really can't say exactly what you're going to do until you see how expensive those options are in front of the announcement. But if the straddle's showing on Google, if it's showing something more than 7 or 8%, I'm probably trying to sell an out-of-the-money call spread on that. And with Tesla, if it's pricing in a 10% plus move in either direction, I'll probably look at selling a call spread on that one as well. Probably the most boring earnings stock ever, Coca-Cola, tomorrow before the open. 11 of the last 12 announcements, the straddle has been overpriced relative to the reaction. That's like the most overpriced option in the stocks that I follow. As far as that's the most, I've never seen one. Coke.
Really?
Yeah, but if you had traded it, you would, if you had consistently traded that, you would have a whopping, where is it? You have about you'd do an average profit of about 50 cents if you sold the at-the-money straddle and covered it the next earnings day.
Now, one of the
and I'm not recommending that. I'm just saying, because I mean, it's just a matter of time until we have some big outlier move on Coke, and it probably happened after I sat there with the microphone in my hand and talked about it. But it is I've never seen 91% at-the-money straddle overpriced the move out of anything that I've been following, and I've been doing the earnings thing for like 10 years since I was even back at SIBO. So those are the things I'm looking at this week. Pretty good for being called up here.
Yeah,
2 minutes before the thing started.
Well, I was going to say, one of the misconceptions is that earnings vol is always really overpriced and stuff like that. I remember I don't know if you've updated this one, but I remember maybe like 8 years ago you told me you analyzed straddle prices for all the earnings in the stock market, and both sellers and buyers lost.
Yeah, what I did was I took, in my universe, every year gets reset. Whoop, the battery or something just happened. There we go. I reset my universe at the beginning of each year, and just because you can't follow everything, I take a look at the 50 stocks that had the highest option volume the previous year. And that's 80% of all option trading right there. So we took those stocks, and this was several years ago, and looked and used the bid and the offer for the buying or selling the straddle. And we found that if you consistently bought the straddle, or you consistently sold the straddle, you lost money on both sides, and basically it was the spread. So options around earnings over a long period of time are efficiently priced. So.
All right, so first off, Tim Navabi actually says to say hi, one of our own co-hosts.
How's that guy doing these days?
He's doing well. So my apologies for my tardiness today. The one thing that will keep me away from an option pit or options insider event would be trading with my clients, and there were some buying power mishaps or miscues on the Schwab trading platform, the institutional trading platform this morning. So ironically, I called and I got Tim Navabi, who's one of our old co-hosts. And let's just say if it wasn't for Tim Navabi, I might not be here today. So he really helped me out a lot today.
The option block continues.
Yes. So first thing I want to mention, I actually am a former insider from Coca-Cola, and there's some big things happening. No, just kidding. So I think that with what's happening in markets right now, over the weekend, there's certainly, like what Andrew was alluding to, certainty is happening right now. And in that, is Biden going to drop out? Is he not going to drop out? He's dropped out of the election. The only other uncertainty that I can see us having right now is, will it actually totally go through with Kamala Harris actually being the nominee, who will her VP? And you could say there's a little bit of uncertainty with, will Biden actually resign for the remainder of his month? So for the most part, I would say the uncertainty that's around that issue is pretty much gone right now. In terms of where we're headed in the next couple months, we have a lot going on. We have the tech earnings, we have the Democratic convention. There's a lot of things happening, and I'm going to give a quote from my grandfather, who was a farmer. In the next month or so, we're going to see where the bearcraft and the buckwheat. We're going to see how are the tech earnings going to fare at the market. What's going to happen at the Democratic convention. Big things can happen at times like this. But as history proves, I remember even talking on this show, we had the January 6th events. Markets didn't crash. We had the COVID-19. Markets didn't crash. Well, they did for a little bit, but then they came back. Folks, this is a resilient market. Now, does this necessarily mean that the economy is great along with it? Well, I do think the economy is good, but I don't think it's because of the market doing well that the economy is good. But we still do have inflation right now. We still have that to where it's an issue, it's a factor. And even though I think it's kind of getting in check right now, I really hope and pray the Fed does not raise rates anymore. It still is an issue, and it's going to be an issue, not necessarily like it was the last couple of years, but it's going to actually exist now, because between roughly 2010 to 2019, we really didn't have it that much. And so that's another thing with which we have to factor in the coming weeks and months. Now, to add to what Mark was saying about the Trump trade, this is something that, I'm not trying to be political, but this was my Trump trade that I really, really, really enjoyed the first 3 years of his term. If he would say, okay, we are going to put in tariffs, we're going to make trade more strict, markets go down. That was a buy signal to me quite a bit. Because immediately when he would see the market drop, he would say, you know what, I changed my mind, I think I'm going to ease off on this a little bit. So that's the Trump trade. Once again, I'm not trying to be political, but if that trade comes back, there's going to be a whole lot of grinning going on, mostly by me, if that comes back. So that's something that I'm looking at if he were to get reelected. And of course, we also have the uncertainty of, is he going to be allowed to be reelected? Because if he's convicted of all those felonies or whatever, or if he has to serve time, is that going to happen? I don't know. Or is he going to beat it? Is it just a trumped up, no pun intended, is it just a trumped up political charge? Is he going to beat it? We don't know. So there's going to be a lot of events happening over the course of the next few months. Now, in terms of what I was actually trading today, we're getting our covered call set for the following month. And I would say within our covered call realm, if you will, I mean, you guys know me, I'm always bullish, of course.
You are.
But within our covered call realm, we have to
Sometimes cautious.
He is cautiously bullish sometimes.
That's right. Long-term bullish, short-term
You're
cautious.
like Ferdinand the Bull.
Ooh, I like that. But with that, as we're looking at it, the question always is, within our covered call realm, this is the section of client portfolios to where are we more bullish, more neutral, or more bearish within our bullish neutral covered call sentiment. And so today, primarily, and for this coming month, what we're looking at is we're being more neutral at this stage. With the VIX around the mid to, I think we're around 15 roughly right now, but with the VIX at around that level, combined with the stocks with which we are using, I mean, there are some stocks that we are out of the money just because we don't want to get called away on them, but primarily our sentiment within the covered call realm is that we want to take advantage of the higher implied volatility that exists, also because of some of the stocks with which we're in. If the market were to go down, we want to lock in more premium at this stage. If the market were to go up, we feel that the premium that we've gotten will make up for the opportunity cost that we will have lost from missing out on selling out of the money covered call or selling a call spread, which we do at times. So we still did some out of the monies, of course, but I would say primarily we're pretty neutral across the board. We want the juice.
You want the juice indeed. All right, let's get out some of the data out here. I was able to pull up some more recent data here while Uncle Mike was chatting here. Let's look at the market right now and see how things are responding from an overall volume perspective. Is it a banger day out there right now? Kinda, and it kind of depends where you're looking. If you're looking at VIX, which I think a lot of people in this building probably are today, the answer is no, it's a snooze fest. 234,000 contracts on the tape right now in VIX, so a whole heck of a lot of nothing. The ADV also coming in a little bit. It was north of 800K, now it's down to 777. But now you start getting some of the broad indices though, things look a little bit more active. SPY, usually this time of day, we expect 4.25, maybe 4.5 million if it's a banger day. 5.5 million on the tape right now in SPY, so volume-wise, they're liking what's going on out there. The ADV, 7.14 million out there right now. And then we have the S, again, another one people in this building are watching. Usually around 1.75 million right now, 1.85 million right now. So the S looking pretty heavy. The ADV also 3 million. Not that long ago, if you had said 3 million contracts are going up in the SPX, I would have said, is the world on fire? What's going on? But in this post-0 day explosion of the last couple of years, 3 million is now just the ADV out there. So it's a very different world. Small caps, I'm sure these guys have been talking a lot. We've been talking a lot on our network about just Russell and just the wild, untamed beast that it is these days. Small caps also putting up some numbers. Usually this time of the show, we'd expect small caps 400,000, maybe if it's a pretty active day. Maybe if things are going crazy, 800,000. 1.15 million contracts on the tape already for IWM. So wow. IWM lighting it up out there as well. The ADV is also 1.65 million, so that has pretty much doubled over the course of just the last few weeks to a month. So Russell 2000 having packing a whole year's worth of living into 10 days out here. And then got the Qs not to be outdone. Usually this time of the show, they're somewhere between 2 and 2.25 million. 2.85 million contracts right now. So the Qs also feeling their oats today. The ADV also reflecting that as well. About 3.8 million on the tape every day for them. Let's get out to some of the single names. People always want to know, is it a hot day on the single name front? And the answer there is kind of mixed. The top half of our top 10, decently active. The bottom half, not so much. So we did run these numbers earlier this morning. I was able to update them just now. So we got some different names popping into our top 10 today, which is always fun, always refreshing. Let's kick it off in a name we don't talk often. This is Broadcom, aka AVGO. 160 even right now, up about 2.65 or about 1.7%. Putting up about 191,000 contracts right now. I can't remember the last time we talked AVGO in our top 10.
Well, it had that reverse split. It had that 10-for-1 split.
That'll do it.
And so now you can actually trade it again. It's not the call option isn't $55.
Plus, it's part of the Great 8.
Yes, and Andrew and I have decided the Great 8, the Mag 7 is wrong. It is the Great 8. That is Apple, Amazon, AVGO, Broadcom, Google, Microsoft, Meta, Tesla, and NVIDIA. Those are the 8 stocks because Broadcom's now worth more than Tesla.
I watched that cartoon as a kid, the Great 8.
That's Great 8.
Oh,
That's
Great
8. Great 8. We call them the Great 8. And that is our official moniker. You may borrow it as long as you give me.
I thought it was the Great One. I thought it was just NVIDIA's market and we're all living in it. And the FANG is just one. It's all one now. Maybe number 9, Marathon Digital Holdings. If you like our crypto show, it usually comes up after this show. Uncle Mike's favorite show on the network, by the way. You can't stop going on. Love you, the crypto show. Marathon, this name's been all over the place of late, down to 15, up to nearly 30. back down to nearly 15. Hanging out right now, 24 1/3, off about 1/3 of a buck, or nearly 1.5%. Good for 196,000 contracts on the tape today. And this is kind of fun. We get some different names in here. Well, not for this one, not on number 8. Number 8 is a regular offender now. This is Palantir. They've had a good run of late. I'm sure you folks have seen it. 28.44 right now, off about 14 cents or about 0.5%. Good for number 8 today, 242,000 contracts. So you can see the bottom half of our top 10, not exactly lighting the world on fire, right about 250,000 contracts right now. Then number 7, Nike, another one. You could tell we're getting into some earnings season, earnings related fun, because Nike popping off today. Number 7, 280,000 contracts. When was the last time we talked about Nike in our top 10? I think the answer is never. 75 1/4, up about $2.50 or a little over 3 1/3% today. Good for 280,000 contracts. And the number 7 spot. Number 6, so let's go for our A tech run now. It's AMD, 325,000 contracts. That's one of your grade 8, I believe. 155, up about 3 1/3 today, or about a little over 2%. Then keeping the A tech love going. Number 5, it's the Amazonians. About 184 even right now, up about 86 cents or about 0.5% right now. Again, good for number 5, 377,000 contracts on the tape there. So you can see the bottom half of our top 10, not exactly lighting the world on fire. Now, speaking of lighting the world on fire, this name did it literally on Friday. This is CrowdStrike. Remember what were we talking? Was it the 240 puts we were talking about on oddities on Friday? That sounds familiar. Yeah. Well, that's almost in play now. CrowdStrike 41 handles today, so they are coming for it. So those puts we thought were decently out of the money are getting closer now. If you listen to our Options Oddity show, listeners, you know what we're talking about. But CrowdStrike.
Where do you buy that, Mark? CrowdStrike. What level do you become a buyer?
I thought you meant like where do I buy the actual product?
What price do you become a buyer?
Well, we were joking about someone sold the 240 puts in September for about $6, $9, somewhere, yeah, 6.5. That's right. And that seemed like, I mean, again, not looking at the fundamentals for it, but that seemed like a decently out of the money, lower risk play. They got a decent amount of premium for it. So that obviously gets you in at 234, and that's 30 handles away now. That was
$170 from the top about, what, 3-4 weeks ago. We're like, oh, that should be okay. No.
This thing was 370, yeah. So at this point, I don't know. I mean, you can't almost literally light the world on fire, right, and not expect there's going to be some consequences to that. So clearly they're still feeling those.
I have a broken wing butterfly that's getting tickled in a bad way right now. Yeah. My short strike was my break even is 265. So it's I'm being tickled in a not nice way by that.
No, yeah. You're a brave man to put on a fly in a name that's
it was 85, 75, 50.
Oh, okay.
And when I did it was 310. So I figured, okay, well, now it looks like I'm going to have a stockage.
Well, at least you bailed on your UVIC, so you got one winner in there at least. Apple, number 3, 558,000 contracts on the tape today. Kind of unched today, 224 1/3 right now, so not much going on there. 556 on the tape for number 3. The top 2, you can probably guess. Who wants to guess? Top 2 most active names today, single names. Anybody? I think you put them to sleep with your pizza. Coca-Cola. Unfortunately, no. Warren Buffett isn't trading all the options today. Anybody else? A guess? The top 2 most active options, single names. Take a guess. What? Who said NVIDIA? Okay, that's number 1. And what? Tesla. There we go. Number 2. All right. So number 2 is Tesla. I know. Stunning. That's not going to talk about it literally every day. 820,000 contracts on the tape for number 2, Tesla. Tesla right now. I just had it up. There we go. Oh yeah, it's up $12. There we go. So yeah, Tesla popping hard today. Of course, Tesla doesn't matter. A day that ends in Y, it's going to be on our number 2 on our list. And then number 1, you know what it is. It's NVIDIA, 2 1/3 million. That sounds like a lot, and it is. But NVIDIA's had 7, 8, 10, 11 million contracts there, or close to it recently. So for NVIDIA, this is actually kind of sleeping, even though they're popping hard today as well. Up $5, about 123 right now, up about 4.25%. So Russell was alluding to some earnings activity before. If you folks like earnings trading, luckily for you, we kept getting a lot of questions from our listeners for years about, should I buy vol go into earnings? Should I sell vol go into earnings? And there, outside of what Russell was just talking about, there really wasn't a lot of data that people could look at. So there was one Goldman study, I think from about a decade ago, that was floating around the internet, but that was about it. So luckily for you folks and all of our listeners, we kind of put the screws to our buddy Mr. Matt from ORATS out there, and we started having him crunch all the data for us with their ORATS machine. And so we've been doing that now for at least before the pandemic, so over 5 years now. So we have a lot of data going back 5+ years on earnings vol. So if you want to see every name we've been talking about and how they performed, what they're pricing in right now, how they performed in the past, how the season is shaping up in aggregate, we have all that data there for you on our website, The Options Insider. It's all for free. Options News and Articles tab in. You could go deep into that one. Like right now, we have a report for Verizon there popping off before the bell today at, let's see, they were 41.62 going into their announcement. They're coming into today. They were, when we ran this report about an hour and change ago, they were 38.89. They're pricing in 3.3%. They delivered 6.6%. So they're outperforming. And quite frankly, that's been the order of the day. In fact, I was just talking about this data with Matt a week or two ago. And he and I forever have been saying what Russell's been saying. There really is no right answer for earnings trading. You buy, you can lose. You sell, you can lose. And that certainly is the case. But right now, in aggregate, all of our data that we've been crunching is at the highest level we've ever seen it. Our long-term average, 100% means every name moves exactly as much as they priced into their straddle. So 100% would be a lot. In the depths of the pandemic era, we got down into the low 70s, low 80%. No one really cared about earnings anymore. That has now completely reversed. It's up. Last season, we came in at 119%, and that moved our long-term average up to 113%. So buying vol in aggregate has been the order of the day. Right now, our season is hanging out with 56 names reporting at 114%. So once again, buying vol has been the trade. I'm not here to say, oh, do an earnings trade, because anything can go any way. But this is the only time I've ever seen it since we've been crunching this data that there is such a demonstrable bias in one direction. And we keep thinking, oh, well, it's going to come to an end, and every cycle it gets stronger and stronger. So that has been fascinating to watch. So we got a bunch of names popping off. Russell, you're just talking about what? Your beloved Coca-Cola. I just had it here. Here it is. Coca-Cola, 23rd before the bell. They were at 65.25 when we ran this report this morning. They were pricing in $1.38, which doesn't sound like a lot, but it's Coke. In the past, they've moved 86 cents on average since we've been crunching this data. So yeah, it's a little bit extra juice out there, at least for this earnings cycle, and all kinds of fun out there. There's literally hundreds of tickers. You can spend all day doing this, but now it's time for us to keep going into our next segment. It is time for a little bit of, well, actually, no, we're getting come up against this. You want to do, I don't know, you think your folks have, we want to do some odd block? You want to do some
questions from the few folks have some questions?
We can do questions if people have questions.
Might be able to incentivize people with some fun prizes.
Hey, I actually did have a quick question for Russell. I don't know if you've ever looked at this. Have you ever, so, we have historical averages for the straddle price going into earnings, or for earnings expected to move, right? Everyone here knows what a straddle is. Straddle is when you buy a call and put, and if you add those two up, those can give you a pretty good estimate. Is there any correlation between how pricey the straddle is relative to the mean, relative to its long-term mean, and performance on those earnings?
No, but that's what people at home can hear. No, but one thing that I have found is a good indicator of where to maybe find a little bit of an edge around trading earnings is when the last quarter was an outlier move, and that's why I was bringing up Tesla and Google. Both of those stocks had outlier moves to the upside, and traders have very short memories. We remember getting run over or being bummed that we didn't buy calls on Tesla because it rallied 12% last quarter. So you do tend to see the pricing of the straddle, and I record the before and after pricing of the straddles. Typically, you'll see a higher straddle price a quarter after you have an outlier move. And so I post the last 12 earnings announcements, the straddle before, the straddle after, and the average move and what the moves were. And I don't talk much about how I use it. I just put it out there on my Substack. But the way I use it is I look where we had tremendously overpriced options the previous quarter, and I take a look at if they're overpriced again, or I'm sorry, underpriced the previous quarter. If the prices are elevated and it looks like it looks like it's a decent opportunity, then I jump on it. But that's the one thing that I have found kind of systematic within the earnings space is the previous quarter does have a lot of influence on how expensive or cheap the options might be in front of the current quarter.
That it does. We'll come up against it. Let's squeeze in a couple of quick payoffs to some of our odd trades. What do you say? So let's go a little bit of, that would be the odd block. Yes, the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Yes, this is, for listeners, if you don't know, this is a segment where we do a lot of unusual activity on the show. Usually we're crunching what's going on out here today. Obviously a little bit different scenario today. Let's pay off a couple we've talked about recently. Let's go back to our July 11th show. We talked about everyone's new favorite, SoundHound AI. Has those two magical letters in it out there. I'm not going to say where it's trading right now. It's a bit of a spoiler. Like, even though it doesn't really matter, this trade already expired. But on the 11th, we talked about a one-day swing for the fences in SoundHound AI. Somebody came in and scooped these 6 calls expiring the next day on the 12th, 3,405 times. Stock was 575, so it wasn't that outlandish of a swing for the fences. They paid 25 cents for those bad boys. Mr. Rock Lobster, 1 day to go. Do you think they made or lost money on that trade? Take a guess.
I'm going to say they lost money.
You are pretty much technically correct. It wasn't a terrible annihilation. The stock ended up closing at 620, so they got close. They were still open. They lost a nickel. They did not. They did not close, so they dropped around 17 grand on that bad boy. Let's see if we can find a winner for us here. Let's go out. So let's go with another favorite, Mr. Rock Lobster, that you and Andrew as well, or Mark as well. This is Peloton. You guys can't get enough of Peloton. He's always telling me to buy Peloton. They love it. Peloton.
I gave away my Peloton to one of my clients. I just said, if somebody will come to my house and take this thing off my hands, I will give it to you. So one of my clients drove up from San Antonio, grabbed the Peloton from my house, and drove it away. And it was one of the happiest moments of my life. It goes, the day my 2 kids being born, the day I got married, and the day they took my Peloton away.
It's like the boat thing. I say the best day of a boat owner's life, the day you buy it and the day you sell it. I guess Peloton, the day you buy it and the day you sell it is the day you're happy. Let's go out to Peloton. This one's had an interesting trajectory. We were talking about, remember those, I think there were 3 puts, people were trying to sell them a while ago, and we were trying to debate even then whether that was a good do, as they say. Let's go back to May 6th on the show. We talked about some upside then. Peloton was having a bit of an up move. Somebody came in and scooped 5,214 of the July 4 calls. Stock at the time was $346. They paid 45 cents for these bad boys. That is a 101 volatility. So they're already a winner out of the gate there, just paying through the nose. There were no earnings. Earnings are on August 21st. They still haven't happened yet here. So this was, and they liked it so much, they did it a total of 21,000 times on the day. So they really liked, at the time, I have a note here that the Rock Lobster loves these, all in caps. So either that's an ironic note, or you really approved of these. But how do you think? Do you think they worked out, Mr. Rock Lobster? Yes or no?
Are you sure I approved of those?
That's what my notes say. My notes never lie.
Yeah. I have a feeling they went the way of sadness and woe.
They did go the way of sadness and woe. Stock closed at 359, so they actually lost on the stock as well. There were 33,000 of these bad boys open at expiration, so they could have choked on all of them. Worth noting, looks like somebody came in around the 1st of July and decided to try to get themselves a little bit more time. So they rolled 20,000. They were one of these open. They rolled 20,000 out to September. They did it for 22 cents for the roll. They paid 22 extra cents. So at that point, you already spent 45. What's another 22 cents, I guess, amongst friends?
Just buy the stock. Yeah. It's a 3. I think we like that as a right. Why wouldn't you just sell the Because that would have given you 30% back on the stock.
Yeah, two losers here on our kind of fun live edition of the Odd Block. You folks woke up from the pizza. You got some questions. You got a little bit of mail block in you. Maybe we can incentivize them with some prizes. What do you think? All right, let's go to a little bit of the mail block.
It's time to take your seat on the all-star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block, the portion of the show where we get wild and whimsical. And we got some listener questions people have sent in, but I always like to give the live folks pride of place out here. So who's feeling frosty out there? Anybody?
Oh,
there you go.
1 second.
So Dr. Vicks, I'm just curious, when you sell on Monday morning, how do you, just walk us through your thought process on your sell price?
You're talking the UVIX? Okay.
Is this working?
Yeah.
You'll be the Vanna White going
Yeah,
around?
well, I'm very good at it. Have you seen me clap?
And this morning at 8:30, I put in an order to sell. I had 1,000 shares on the offer. I'm not going to mess around with it at all. It's still relatively new to me. When I do these things, I'll run the numbers and I'll start trading it in small size. And like I back tested it all 4 weeks ago. I haven't looked at what the back test would tell me these last 4 weeks, so I compare my actual executions to that. On the entry side, I've actually been entering a couple hours before the close. And
That surprised me. Why did you choose that?
Well, because it worked the first 3 weeks. It didn't work this past week. But also just thinking that some people might be stepping into them as we get toward the close on Friday. Or just, honestly, I was just telling everybody about the trade. I wanted to put it on. I want them all to follow me, and then I went right after them.
Yeah. Well, I do think that sometimes on Fridays, especially when vol's a little more elevated, when they try and sell the weekend, they actually kind of overshoot the target sometimes, and you can scoop some premium at a discount. So usually around like one-ish Central Time, and then once they see the buyers, they know they screwed up. And they start raising vol a little bit, but there can be some opportunities there. I like the timing.
And what's really funny about that trade is when I was at SIBO at the Options Institute, I just preached, don't get long volatility in the afternoon. I mean, it was like, don't trade Friday afternoons ever. And now I'm doing it.
All right. Any others? I got some listener questions here, unless you got some live folks here.
Any questions from the audience? That was great.
Let's go. Let's go to this listener question.
We got a question from Ed.
Oh, Mr. Uncle Mike, you're on the boat with the 10-year note, sir. So you get that first. He wants thoughts on volatility in regard to a potential interest rate change in September.
So right now, typically, Mark and I were even talking about it on TWIFO last week. The 10-year note and bonds really don't move much, do they?
No. It moved, I think, 0.001 cent when we talked about it last week.
I think we're going to continue to be very boring in the interest. I don't think that the Fed's going to want to make a move one way or another. I think we might go up or down a quarter point between now and then, or go down. I'd be shocked if we go up in an election cycle. I think we might go down in terms of the vol on there. I don't know if we necessarily have a big interest rate fearful event to drive volatility up in the near term. So I think volatility is going to remain pretty much the same between now and November. I do see interest rates coming down next year after the election. That I think it's going to, in terms of the volatility that exists in the bond space, I think that volatility is going to go lower. More boredom, unfortunately, for traders in the bond.
Anyone else want to add anything to that, or?
I guess there's a scenario where we get some bond vol if China and the U.S. get in a trade war, and China decides to start selling U.S. treasuries. You could see a little amount of volatility come out of that. But that's about the only major. That's all I can think of. Can you think of any other big interest rate catalysts? I mean, vulture pumps are going to come. Vulture pumps are going to try to short U.S. treasuries, right?
I assumed you were looking at me.
I'm looking at both of you.
Okay. Well, I always look at what the option market's pricing in with respect to when the next hike or next cut is going to come, and the cut keeps getting pushed out, as we all know. I do think for that to get pushed farther out, we need more than one inflationary economic number. I think we get an inflationary economic number which either pushes it out or makes people start to talk about a hike instead of a cut at the next time. It's going to take more than one. So if we get an inflationary number, let's just say the July employment number, the wages are under pressure there, are being pushed up there, and some people have a slightly negative reaction to that. I think the next number we get, the CPI or the PPI, whatever comes after that one, I think the market's going to want confirmation before it actually changes its mind from what you're talking about. So I think you'll have time to change your mind on that one.
Sell the straddles.
It has been fascinating. Mike mentioned the show he was on with me last week, our This Week in Futures option show, where we crunch all this data going up from all the futures options over there at CME every week. And as you can imagine, bonds are kind of the most anemic of the bunch. I think the 10 years at what, like 4.25%, something like that right now. Interesting enough, that's the price volatility of the actual asset. CME, interesting enough, they put out a series of volatility indexes they call CVOL. And they look at treasuries two differently. The price volatility, which is anemic, 4.5, and then the volatility of the yield itself. And that is much higher. That's at triple digits right now. That moves around quite a bit week after week. So it's an interesting dichotomy. I haven't had a chance to really sink my teeth in too much and say, you know, how can you harvest this yield vol versus the actual price vol of it itself. But the fact that they calculate it and disseminate it is interesting. If any of you folks are intrigued, it's all freely disseminated. Just type CME and CVOL, CVOL. That stands for their CME volatility indices. You can see the whole dashboard comes up, and you could, one of them you can pull up there is just for treasury yield vol. You can do anything. You want ags, you want the aggregate ag volatility. Say that 5 times fast. You can pull that up. What do you think? You think the folks did a good job with the question? Should we reward them with the prize?
Sure.
All right, we'll be nice. I give all these guys prizes, so I should be something for you. We should just make it fun, make it big too. Not like, you know, how about this? Let's go.
Who is this guy?
I don't know. I'm feeling like Santa Claus today. I've never given away that many before, so that's worth quite a bit actually. My producer's going to get pretty pissed at me, but it's all right. Why not? Let's cut all this out. That works for the live stream folks too. You're listening to.
Oh wow.
I'm giving away prize. I'm like Oprah. You get a
It's
code.
crazy.
You get a code.
To quote Mike Ditka, Mark Longo normally flips nickels like I flip manhole coins.
You know, I said that about you on Friday.
He literally did. He literally said that about you on the show on Friday.
You throw around compliments like manhole coins.
I had never heard that expression before, and when he said it about you just on Friday, now I've heard it twice in the past 48 hours. So there we go, listeners. As we go into our final segment, let's go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, welcome to Around the Block, the portion of the show where we look ahead a little bit, see what's going to be going on between now and our next show on Thursday. We'll go in order, Mark. We'll start with you, sir. What are you feeling, keeping an eye on until the Thursday show, sir?
Well, we got the option pit
Super
Conference
Summit.
2024.
Super Summit 2024.
I'm excited to listen to Mike Tosaw here in a little bit.
Oh, yes.
Presentation on tax.
You got to hold up your belt the entire time you do the thing, too.
But really, we've got the beginning of earnings. You know, the panel was kind of saying earlier, right? They've got to be perfect. Good is not good enough anymore. A B plus isn't cutting it. An A minus might not even be cutting it. Got to be an A for us to keep this rally going. Rally home.
Yep. Yes, I concur, but even as they come out, I think vol starts to drift down a little bit because we haven't had, once again, we looked really 3 days of sell-off, and then they buy it. So the overall pattern hasn't changed. I think the Qs will get a little softer. We saw kind of the writing on the wall with those stocks, but so they're going to buy something else. They just won't buy the Q, but I think we'll see a little less vol this week.
I've been, and it's been painful, I've been short the S&P and long the Russell. It started to work over the last couple of weeks finally. It still has a long ways to run. Going into the weekend, I think the Russell's only up around 7% this year. The S&P's up about 15%. But if you go back even farther, the Russell has underperformed for, gosh, a year or two at this point. So, in fact, we flipped to where I think the Russell was first published in the late 70s. And recently, we flipped around to where the Russell 2000 had underperformed the S&P 500 since its start date, which goes against so much academic literature. It's ridiculous.
Mr. Uncle Mike, sir, take us home.
So to add to the grading scale that Mark had said for earnings, my daughter, she's in all honors classes, so she gets extra points for her GPA. My son's in regular classes, so he does not get extra points. I believe that right now, just to add to what Mark is saying, an A, you're going to need extra points, so you're going to need not only an A minus equals a B plus. And the reason I say that is because the market as a whole right now, we could be at a top. Because we're right below the all-time highs, that's going to be working against us as well. So enjoy the volatility, enjoy the premium selling, enjoy being able to position yourself properly with what's coming up. There's always a way with which to do it, and looking forward to talking about it in about 20 minutes or whatever I'm talking.
Yeah.
So I gotta say, I earn my living in the derivative space. I understand derivative options inside and out, but be honest, does anybody up here know what a cosine is?
She's in geometry now.
Yeah. I had Andrew do that on my loan to my house.
And there you have it.
There we go. And on that note, listeners, that will do it for us on the option block this week.
If you lied to me, I wouldn't know.
I want to thank Mr. Dr. Vicks for joining us for the first time ever. Kind of threw you into the deep end. Wasn't that bad, right? We didn't go that crazy with you. Just took you to task a little bit for throwing all of our money on the fire for you, Vicks. But outside of that, we don't hold it against you there at all, sir.
Thanks for not telling me.
Yes, there we go.
Trade. I didn't know about your trades.
Nice.
That's going to do it for us on the network today. Obviously, no crypto rundown. I'll be doing some stuff here, then I'll be heading back to the studio later. So no crypto today. Pro Q&A tomorrow, so check that out. If you guys go on over to the Pro, you can check that out. Maybe not this week because you'll be busy here, but whenever you get back home. And then, of course, the Options Bootcamp on Wednesday, another Pro Q&A. And then back again on Thursday, another episode of the Option Block. Woo! Stay safe out there, everybody.
All right.
There we go.
All right.
Most options trading platforms are commission-free, and there are some that don't charge per-contract fees. Public.com goes a step further. When you trade options on Public, there are no commissions, no per-contract fees, and you get a rebate of up to 18 cents per contract traded. That means it costs less than $0 per transaction. In other words, instead of paying to place options trades, you literally earn money, and that money can add up fast. If you trade 1,000 option contracts on Public, you'll earn up to $180 in rebates. 10,000 contracts? Up to almost $1,200. It's pretty obvious why NerdWallet recently gave options trading on Public 5 out of 5 stars. Because Public really stands out for the cost of its options trades. Their words, not ours. If you want to start paying less than $0 to trade options, check out Public.com and get a rebate of up to 18 cents per contract traded. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. U.S. members only. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.